Welcome back for another episode of Strive for 25. Joel Farrell here, and looking forward to sharing. All right, welcome to another episode of the Strive for 25 podcast. Joel Farrell here, and I've got a really cool guest on today from St. Louis, Missouri, my hometown, Javon Williams. And you've got a really unique story, and also you're a young dude. You're 24 years old.
Yeah, 24.
And you've already been doing a lot of cool stuff. But do you want to just kind of give us a quick background of what you're doing right now with your almost two full-time jobs and what your other passion is on the side real quick?
Yeah. So right now I've been driving for the Parking Spot 3. I'm a shuttle driver. Been doing that for about 4 months now, and I've been fueling the airlines for a month. And it's about 30 hours as a shuttle driver and about 40 hours as an airline fueler, between 20 and 30 hours shuttle driving. And then I've been studying and learning, practicing trading Forex for 3 years. I started 2019, February 5th. And then from there, it's just, I got bit by the bug and I just been stuck with it. I couldn't really get away from it.
So, you and I have talked about this, and I've got a little bit of knowledge of the markets, just following the stock market and the bond market for my day job in the mortgage world. So I know charts, I know some day trading strategies, but for the listeners out there who aren't familiar, Forex is foreign currency exchange. How do you? Okay.
The foreign currency exchange market. And
okay.
So the stock market is it's like, I think the worth of it was like 3.6 billion or something dollars, but the worth of the Forex market is like $6.6 trillion. So the Forex market funds the stock market. It's because it's the transfer of every currency in the world being traded against each other. That goes to the yen to the pound, from the United States dollar to the Canadian dollar, even the African ZAR to the Mexican peso. You can pit any currency against each other, and the more exotic it is, the more valuable it is. And it's basically, that's really how it works. And the market runs 24/5. It opens Sunday at 4, closes at Friday at 4, but it's 24/7. 24/5 other than that. Unlike the stock market, it closes at like 4, I'm pretty sure, and opens up at 7. So you have like only an allotted amount of time.
Yeah. So you have kind of a unique work schedule, right? So you're working afternoons into the evenings, right?
Mm-hmm.
5 till 1, maybe 4 till 1. I think it was what you said.
Five to 1.
5 to 1. And so when is that sweet spot for you doing the Forex trading?
Really, I've been trading during the second job, the airline fueler, because I work from 5 to 1 and then 4 to noon. So I'll get a nap in between between the 1 a.m. to 4. Then I'll go to work at 4. And then we're not constantly working. So in between that time, I'm on the charts. And then when I get home, I basically type out, I'll show you over here, but I basically map out what happened that day, put it in my journal, and then I'll reflect on it on the weekend, on Saturday, whenever the market closes. But that's really when I'm trading. And then on Tuesday and Wednesday, I'm up the whole London from basically midnight to about 3 or 4 in the morning. And then I'll go to sleep, wake up about like 8 or 9, or I'll sleep till 10. Because there's also an afternoon session that I can catch Tuesday and Wednesday for indices like S&P 500 and NAS 100 and US 30. I can catch the afternoon session for those pairs.
So what you're saying is you don't ever sleep. You're up 24/7, right? Is that what you're saying?
I think this week I probably got like 7 or 8 hours of sleep. So,
jeez, that's crazy. That's crazy. And that statement right there, there's so much to unpack with that, because we talk about this a lot. When your why is strong enough, the how figures itself out. And to do that and saying that, you got to have a pretty strong why, which I want to dig into that a little bit later. But how did you get into, because Forex trading, it's very specific, very unique. And, how did you get into that in the first place?
It was real. It was funny story. I was scrolling on Facebook, just scrolling through Facebook, and I saw this girl, which I thought it was my male friend, but it was actually a girl. They had the same name. But I saw her on she posted a picture. She's making like 50 or like $60 from her phone. And she said, if you want to learn how to make money from your phone, message me. So I was like, well, you making real money from your phone? So I messaged her and we get into it. We start talking and she basically says, yeah, it's called Forex, foreign currency exchange market. And you basically trade currencies against each other and you can make money off of it. And I was like, I was skeptical. I was real skeptical at first because it was like, it sounded like it was a scheme, like a scam or just something, because no way you could just make money from your phone just by pressing a button. Because all she did was she said she pressed sell, price started dropping, and she was up 50, $60. And I was just surprised. So from there, she showed me the group that she was with. It was an MLM, which is a multi-level marketing group. It's called iMarkets Live, IML. So I paid $225 to join that. And then I started learning. Once I paid the 225, they released to me a lot of content, just beginner courses, intermediate, advanced, and then they had live streams throughout the day. People will be talking at like certain times throughout the day that I had access to. And then I was also put into a group of people that we were all basically learning together and basically going to be on this journey together. So in that process, well, the process didn't go that well because it was so many people to where I kind of just was at the bottom and nobody really cared. So I was just going through the material on my own and took notes, got what I got from it. And I did make a little money because the second I learned it and I thought I knew what I was doing, I put real money into it. And I made a little bit of money, but I also ended up losing it. So the journey was definitely hard. And then I paid another month of that too, because I thought maybe it was just something with me, because they started introducing things that would basically tell you when to get in and when to get out of a trade, making it somewhat like basically automated. So I paid another month for that to do that. And that was another 200. So, but I stopped after that. So in total, I spent about 425 for the education. And the only reason I say that is because I just want to kind of tell you, like in total, I probably spent $4,000 to $5,000 over the past 3 years in just education and trial runs and practicing and learning. Like, and I'm still going at it. Like I'm still gonna invest more money. I'm not discouraged by that or anything like that, but it definitely takes some persistence and some money that I worked hard for over the years. But that's what got me into it. She added me into that group, and once I stopped paying for that group, I found other groups, because once you find one person that knows about it, then you just start seeing more people, and then somebody else got me into another group, and that lasted for probably about 6 months to 8 months. I stuck with that group. They were better, but they weren't what I needed. And then when I finally came over and found my actual mentor now that I completely study under, which is ICT, that's when I ended up paying. I joined his actual paid mentorship group and paid 155 for 12 months. And then at the end of that 12 months, I paid 200. So I paid about like
Can you
2,000.
repeat that one more time? What was the name of the group?
ICT, that's the name of his YouTube. His name is Michael Huddleston. Inner Circle Trader on YouTube. And I basically joined his paid mentorship group. Went through the whole year of learning and studying under his tutelage. And then this is my first official year on my own. So the first year was learning from the multi-level marketing and the other group that wasn't really what I needed. Then the second year, I was kind of using the free information that he offered on YouTube. And then he offered the mentorship in 2021. I instantly signed up for it, paid for it, and then finished that out last year. And now I'm on my first year
Why would
learning
you
by myself,
say he's different than the rest?
because he teaches a completely different mindset and perspective of the markets. He teaches you not to look at the markets as in buying and selling pressure, but as in the market runs off liquidity, because if you want to buy something, somebody has to sell it to you. And if you want to sell it, somebody has to buy it from you. And the only way for that to be achieved is for there have to be something in the market. There has to be money somewhere in the market for somebody to take. So, I mean, it'll be easier to explain when I show you, but the market runs off liquidity. So,
yeah, because you mentioned algos in our previous conversations. So do you want to dig into it right now and just share your screen and show a couple of things now, or do you want to do it later?
It's up to you. I can show right now if you want.
Okay, yeah, let's dig into it. Yeah, because I think one of the things you're telling me is that these algos, they have preset kind of directions and formats and patterns that they want to be able to do and get to a certain place, and you can, I guess, decipher or recognize these patterns and trade off of them. I guess is what you're saying, right?
Exactly.
Cool.
So let me see where I'm gonna start off. This right here, this is today, the 31st. This from this purple box. And I run off, let me just say this real quick. I'm running off New York time. So they're gonna be an hour ahead of us. Because that's the time that the algorithm runs off. It runs off New York time. So I'm just gonna, this is the 15-minute time frame right here. I'm just gonna break down to the 5 real quick. First, I'm gonna point out this. Wherever you see, so you see these 3 lows right here that are all relatively equal. Like they're all relatively close to each other. Below these lows is gonna house liquidity. And by liquidity, I mean money. So let's say you got into a buy position right here. Your stop loss is going to be below this low. Just that, because that would make sense, because if price were to go below this low, you would think that you're wrong. You've seen that it bounced off of it 3 times, so why wouldn't it be support? It should hold price. So you're going to put your stop loss below that. So below that is going to have liquidity, which is going to be your stop loss. So if price goes against you, you lose that much money. So that's just an example of liquidity. So liquidity is equal lows, equal lows, 2 or more, and also this high right here. Short-term highs. Short-term high is a high, like see right here, we have a high, a lower high, and a lower high. That's a short-term high. This high right here, we have a lower high to the left and a lower high to the right. That's a short-term high. This right here is in between both of those, and it has a lower high to the left and a lower high to the right. That's a swing high. So swing highs and short-term highs are going to house liquidity as well. So just how these house liquidity, this is too, because if I were to sell this high right here, or if I were to sell right here, I'm going to put my stop loss right above this high. So it's going to house liquidity either way. Or if I was a breakout trader and I thought price was going to keep buying up, and I put a buy stop right here because I figure it's going to keep going up, that's also liquidity there as well. That the algo is going to reach for. So the algo doesn't know where you put your stop loss or where you put your take profit. It just knows where liquidity is housed, because people look at this as a double bottom. Once it bounced off twice, this third time it should bounce off again, and it does. So now they have faith that this is going to hold as a support, that price isn't going to go below it. But like I said before, price runs based off liquidity. So we just established that there's sell side liquidity here and this buy side liquidity here. And so, now,
can I stop you real quick? So if you were going to make a trade on this, where would you make a trade? And where would you get out?
Perfect. I would aim to get in around after, because price has to take sell side liquidity before it can go. Price has to take opposing liquidity before it can go in the intended direction. So if I'm expecting price to go higher, I would want to wait until price takes this sell side liquidity here and aim for this buy side liquidity here, because they're gonna, people who had their stop losses or who are wanting to sell, I'm gonna buy those positions off of them, and then I'm gonna sell my buy positions to the people who wanted to sell or had stop losses up here. So if you had a stop loss, I would get out of my buy position at your stop loss because I would sell my position to you because that's your stop loss. Or people who would be, vice versa. If they were trying to sell down here, I would buy those positions from them. They would be in profit for a little bit and it would go against them. So this is where I would look to buy. And I'm going to show you a little signature.
So if you're buying, right, and then you get to the top and you sell, then you're going to get a profit. And then if people are people short selling and starting their position with a sell up at the top here, is short selling a thing in Forex?
You can short. Yeah. I mean, I'm not exactly sure what you mean, but theoretically, people are assuming that this is a sell. Like there are people that once this gets up this high, they're selling it. So in a sense, the market's going to play on that. So if you're trying to sell from right here, you notice how as soon as we run this high, the market drops down. So if you had a sell limit right here and you expect the price to drop, you see that. And these are 15-minute candles for 30 minutes, price is going in your direction. You would have thought you were correct. And then price does this and flies up. Let me see how many pips that was. And it goes 31 pips against you. Nobody's stop loss is going to be bigger than 31 pips. So they're most likely going to lose that trade. So,
okay.
But if I want to actually act on this, but this is more of a long-term view in my sense. I could show you something on the smaller time frame and show you like how I would actually get into it. Because you could trade from knowing that there's sell side liquidity here and buy side liquidity here. You just have to wait to see which one that it wants to go for. Because if I know it's going to come here to go there, then why wouldn't I sell from here to there? And then I remember before I was telling you about how London makes the higher low of the day every day. This is the only day that it didn't, because today is, and I also told you that the first Friday of every month is going to be NFP. Today is August 31st. If you go to forexfactor.com, I wonder, can I show you? Can you see that? So today, non-farm payroll employment change. It's supposed it gets, well, since it was the 31st, it's going to get reported today, but it should also get reported on Friday, which it will right here, which is non-farm employment average hourly earnings rate. So these news factors have a big impact on what the market does. So that's the main reason why it didn't happen today. But if I show you right here, here's London the previous day. The low of that is 99823, and the low on this low is 24. So it was lower. So London made the low of the day that day. Today, the previous day, this was Monday, London made the low of the day. And I told you between 2 and 4, here's 1 a.m., here's 2. So between 1 and 2 a.m., it made the low of the day. Sometimes it can stretch till 3 at the latest. But between 1 and 3, you're going to get the low of the day in London. And what happened? Here's London, the low of the day. And we can go back and see it even more. Like here, 2 and 3, low. It didn't happen this day, but this is a reversal day, but we can get more into that. But it reversed because once we took this liquidity, where else was there to go? There's liquidity here and there's liquidity here. This short-term swing low right here. And we came down and got that and used that liquidity to take price back up. And now I'm expecting price to come up for this liquidity, this right here, similar to that.
So on average or whatnot, if you're up from a 1 to 4 session, how many trades would you do in that session?
Between 2 to 3, just because I like to aim for liquidity pools. So just how we outlined that earlier on the 15-minute time frame. Here's the 5-minute. I just want to show you something weird. So if you take the Asian range, which is from 8 p.m. to midnight, you take the highest point and the lowest point, and then you throw a fib on it.
Ooh,
price.
That's something I'll have to explain down the road. The fibs, that's some high level stuff. Okay.
It is. But this is it's basically just deviations of a range. So if I took this range from that high to that low and copy and paste this box one time, it would be right here. If I copy and paste this box two times, it'd be right here. So you can basically uh use a segment of time to measure how far price is going to go in a segment of time. So this was this is the Asian session from 8 to midnight, and we basically just projected how far the London session would go, because 2.5 deviations, and we were off by maybe a few pipettes of catching the low of the day, 0.7, 0.8, so not even a whole pip. You got that from using the deviation of Asian range. So it's like, this is just proving that it's an algo, because how can I almost get the perfect low of the day based off something that happened before this even started? From 8 p.m. to just hitting midnight, I could use that information to project the low of the day and then possibly the high of the day as well.
And so this is the kind of stuff that translates to other markets, right? The stock market, the bond market.
Yes, this applies to any and every market. If the candles look like this, if it trades like this, or it can even look like this. It can look like bars. It's all the same.
So
it's all just reading price.
Pattern recognition, knowing the game. These are some of the things I think we're talking about here. So if you were to break it down, what's the number one reason most traders fail?
The reason most traders fail, for one, is because they look at other people and they look at their success and try to compare themselves. Two is they don't have a consistent routine or thought process, because not only do you need a consistent routine, like every day I mark out this Asian session as a box, and I mark it down to see how far price could go down if I'm thinking it's going to be a bearish day, and I'm marking it up high to see how high I can go if I think it's going to be a bullish day. And that's something that I do every day. And once I see it sweep one side, like this was the box for Asian, once it sweeps one side, if it doesn't come to the middle of it and go and keep going in the direction that it went, I'm assuming that it's coming the other direction. And now I'm just trying to get in at one of these fingerprints into the market. I'm just trying to get in and I'm chasing liquidity, which was down here today. So it's the hardest. So it's like people, if you don't have so it's like not having a consistent routine and not knowing what you're looking for and having a consistent thought process, you're not going to be able to be successful. Because if I didn't come in thinking the same thought process of, all right, if it goes here and doesn't go all the way, then like if you can't keep a constant bias per se, then you're going to have a difficult time. Like if you're wishy-washy and you can't stay stern in your decision, then you're going to fail, because the markets are meant to play with your emotions. It's meant to make you think one thing's happening when another thing is really happening.
Yeah.
So you just have to really be consistent and have a consistent thought process, and you have to be just a consistent person overall in some aspect, like honestly, because if not, then you're never going to be able to be consistent with the market.
So from a higher level, right? So you've got people that have been doing this for years and know the game in and out.
Right.
Those people that are in that higher level and experience, what is how would you kind of illustrate what that life looks like for the top traders, and how much money are they making? What's the cream of the crop? What are they doing?
Man, so I'm gonna be honest with you. The real cream of the crop, you'll never hear from them, because they silently make at least $500,000 a day, and it's like they live in remote areas, because it's like, as a trader, you don't need anybody. You don't need to interact with people. You just need to be one with yourself. You need to know yourself. You need to understand yourself. But you can go to YouTube, and there's this guy who's actually in the same mentorship that I'm in, but he was in it the previous year or the previous 2 years. He's a little more vetted with it. His name is Red Pill Trading on YouTube, and he signed up for the prop firm FTMO, and they give you a certain amount of money to trade with, demo money, and then the profit that you make on that, they send you that actual profit to you, and they split it with you 70-30. So if you make $100,000, they'll send you $70,000, and they'll take 30%. And they'll take 30,000. And excuse me, he has proof for like the last 8 or 6 months of him doing that and trading his live account, and you can see how much he makes. He's well over $1 million just in his own account. And then I know he has a few FTMO accounts. So, and I mean, he's humble with it. But it's the cream of the crop is really, it's having any and everything you want. The Forex, there is no limit. Like let me show you just real quick over here on the screen. Just an example so we understand how money is made. So I'm just start right here. So this little gap right here, I don't know if you can see it. I'm gonna zoom in. So this low, the low of this candle, and the high, of this green candle right there. Can you see that in between it, there's a gap where there was no trading, there's no wick or anything. It's just a straight gap. Just price just went straight through there. So that's called a fair value gap or an imbalance. So if we drag that out in time, let's just say I was waiting for price to come and hit that fair value gap, and I entered my short at the bottom of this fair value. Oh, that's not right. I enter a short right here at the bottom of that. Put my stop above these highs right here, 6.7 pips. And then I just target for that low, the liquidity that was right there that we pointed out earlier. I target right there. So that's 6.45 R ratio for my trade, right? I was risking 6.7 pips to gain 43.42. Now,
can you explain that one more time? So if you put $100 into that trade, what happens?
That's the thing. So if we're talking, I kind of want to type it out for you.
Yeah. Okay.
$43 pips is going to equal 30 cents. $43. $30. So what this was right here. So it's to say I entered at that fair value gap that I just told you about, which is one of the fingerprints in the market. It's something something that always happens, something that you can always catch. It's something you'll see every day. So you entered at the end of it, and you had your stop loss above these highs right here. So I was risking 6.7. So if I was trading with, let's say, but it all depends on your account size, or it depends on your balls, really, is what I'll say, because you can put $500 into an account and get the leverage of 1 to 500, which means for every $1 that you put into the account, they're going to give you 500. So that's going to up your leverage to where you can risk more money on the account, but you're going to lose that money just as fast because they're giving you more than what you really have. So so this trade was risking 6.7 to make 43.2. So to make 43 pips, if I was risking, if it was 10 cent times the 43. The 10 cent per pip looks like that. No, it doesn't. Looks like that. That's 10 cent per pip. I should have this already ready. Yeah, I don't want to write it out loud. I should have had this ready. But once I do these two, it should be kind of self-explanatory. So then 10 cent per pip, and I caught 43 pips. I would have made $4.30.
So
Now, if I was
you
straight,
put in 10 cents to
it's
make
not, no,
four.
no, no, no. I didn't put in 10 cents. So like, let's say my account I have is $50. I have an account
Mhm.
with $50 in it, and my leverage is 1 to 250. 10 cent is just how much I'm risking. So I'm willing to risk 10 cent for every pip lost or gained in the market. So if I were to lose this trade, I would have lost 10 cent times $6, which is like 60 cent compared to making $4.30. For every
Okay.
10 pips, every 10 pips is going to give me $1, risking
Okay.
10 cent per trade. So let's say I had an account that had $200 in it, then I could risk $1 per trade. So then I was willing to risk $6 to make $43 because I was only aiming from here to that liquidity that we marked out earlier. So that's $43. And so then if I up that and I risk $10 per pit, it's going to give me $430. And then the more money you have in your account, the more you can risk. So let's say you have a $5,000 account, you can risk 10 or $100 per pip if you manage your money correctly. Because if it's $100 per pip and I have a 5 pip stop loss, that means I'm willing to risk $500 to make 4,300. So it's like I said, is if you have the balls, you can make just about anything. But if you want to do it slow and steady the right way, you always only risk 1 to 3% of your account.
Okay.
But if you have the money to, to do that, if you have $5,000, you can take this trade and risk $100 per pip and possibly make, $44,300. And if we look at the time this trade took, entering from this green candle, these are all 5-minute candles. When it hit your take profit, it would have took 40 minutes. So and this is so from 3:15 in the morning to 3:55, you would have made $4,300. Or let's just say you had about 20 or $25,000 in your account, and you took the same trade and you were doing $1,000 per pip, you would have made $43,000 within a matter of 40 minutes. And so that's where these. Go ahead.
As I say, so you're getting into kind of part of the why, I'm sure. Well, why does somebody spend years to learn this stuff, right? Because if you can build up your account to a certain level, then there's an opportunity to make some decent money.
Decent money within a fraction of the time you spend at a job or doing anything else. 40 minutes at 3 o'clock in the morning. For 40 minutes, I just made my yearly wage. I'm gonna go back to sleep for the rest of the day and wake up when I feel like it because I'm good. And one quote that I mean that's one quote that I kind of made, or something that really like kept me going with this was, what if your job told you that you had to work for them for 5 years, and for 4 years they wouldn't pay you anything, but on the fifth year, your pay was exponential, infinite. You can get whatever amount you wanted on the fifth year. Would you stay with that for the 4 years, knowing you're not getting paid anything? And every time I always say yes. I would do it because I know at the end of the light, I mean at the end of the tunnel, it's a light, like no
Yeah.
question. So that's why that is my ultimate why too.
Yeah. And that right there is like such an impactful, place to even just digest a little bit because, if someone said, yeah, you're going to be guaranteed to be able to make an infinite amount of money, $1 million, $1 billion, whatever it is, but that's not really how life works, right? I mean, there's no guarantee. So you put in all this work, and I'm sure you have days where you doubt yourself, days that you have some failures and don't have the successes that you desire.
Oh yeah.
but
Oh
then
yeah.
coming back every single day to keep going and learning and getting better every single day for the what if, and then all of a sudden, you know, then things start to click, things start to go forward, and you get momentum, and
That's
then all of a sudden, right? I mean,
that's all. It literally, it just takes a click. Once you get that click in your head, something that clicks for you, something that you just can't unsee, something that you really like, it's gonna be impossible for you to lose. And it's like I'm only saying that because I've seen it. The group that I'm in right now, that I'm actively in, like what I've seen him do, like $23 to like $10,000 is it's ridiculous. Where it's like
what's your mentor's name again? Michael?
Michael, but I have another mentor who actually who learned from him too. Like
Okay.
student, like yeah. But his name, I can give you his YouTube too if you want. It's the Currency Merchant on YouTube as well, and he's a student of my mentor. So we're all students of him. But what you're able to do with this knowledge once you master it, it's scary. Like he did it in front of us in two weeks. He took $23 to 20,000.
Jeez.
But I'd rather have him come talk to you on a podcast or something. But he lives in
Sure.
Jamaica. But we
Okay.
can like I'd rather
Yeah,
because so you can see it. But
that's
it's
cool.
just once you know the capabilities and the possibilities, there's no giving up. There is no, I mean, I doubt it. I never doubted myself. I just I just always thought that I should be doing better, or I need to go harder, is what it makes me think. Because it's like once you learn it, you're gonna make money. The only way you can lose is if you give up. The only way I could fail is if I don't keep trying. The only way I can get knocked out is if I don't get up. So it's like I don't really see an end, because I want this to be what I'm doing when I'm 40, when I'm 50, when I'm 60,
Yeah.
what I want to be doing. So
So, you know, the some of the stats out there of wealth, right? I mean, I'm kind of getting to a point here. You know, you
mhm.
got this wealth gap from the top to the bottom, and you got people that, you know, can find the right formula and, you know, get ahead, and then you know, start to build wealth. And, you know, when time's on your side and you're doing the right actions, and those actions compound for you instead of against you, then
Right.
you have the opportunity to be able to you know, to build wealth and have that snowball for you in that direction. But um, you know, how do you keep pushing through, right? I mean, how do you know so well that you're going to make it? How did you get to that point? Were you always at that point that you just knew, or can you manufacture that in a way to where, you know, that you can start believing in yourself? Because, you know, the people out there that don't reach their goals, they know what they need to do to be able to reach their goals, but many people just don't do it, or don't do it consistently enough, or maybe get distracted or forget, right? Just like your New Year's resolution kind of stuff.
Yeah.
People start out excited and want to do it, and fall off the wagon, you know, after a week or two, or a month, or they don't see the results, so they stop, right? So how do you tackle that? How do you explain that?
See, what I would probably say is, because I honestly I had one nice success in the beginning, and whenever I feel discouraged or like I can't do it, I just go back to that one success that I had and realize that I did that. I did that out of my own validity, and I didn't even know as much as I did then. I know way more now than I knew then. So there is no excuse. I'm better than I was then, and I did really good back then. So there's no telling what I could do now. So the best advice I'll probably say is make sure you like it first, and then just be successful one time, and make sure you screenshot it, take a picture, whether it be real life or in your mind, and have that hanging up like I did that. Because people a lot of times forget who they are. They forget what you've done. Like you came a long way. Like don't assume just because you have it's shitty right now, but like you came a long way. Like if I just look back to what how I used to think and all that, I've come a long way. Like if I wanted to, I could sell my knowledge, just as things that I know about the market. I could sell it to people. Like I could tell you how to get in, how to get out, If you follow my exact rules, I promise you, like, we may not win all the time, but at least 70% of the time you're gonna win. It's just about being consistent with it. So it's just that's really the best advice. Just make sure you like it, and if be successful. I'm not saying be successful, but try your best to at least do it well one time to where you're satisfied with it, and kind of hold on to that memory because that'll remind you. It'll keep you going. At least that's what I mean. That's at least for me. That's
Do you
how
have
it's going.
any processes behind that? You mentioned, print it, stick it on your screen or your wall or whatever. I mean, what are some of the processes that you use as your career on this has evolved to try to keep your processes, your systems in line and to build those habits?
On my Telegram, on my phone, I have Telegram, and I have a personal journal that I basically screenshot and talk to myself. I screenshot trades, charts, talk about how I was feeling, whatever, and then I'll post it there. And then whenever I do that, these 3 or 4 times a week, it may be like 1 or 2 days where I don't do it, but that's because I wasn't in tune with the market. I was kind of just looking at it, checking on it. I wasn't trying to get in or trying to get out of a trade. But whenever I'm trying to get in, trying to get out of a trade, or if I'm really studying price action because I want to see price do something that I'd expect it to do, I'm screenshotting back and forth, typing in notes how I feel back and forth. And just that's really my process, because then at the end of the week, I'll come back and look at it. Or if I'm ever feeling discouraged that I don't know what I'm doing, I'll go back and look at, like, dude, you knew exactly what was going on in price at that moment. And that was you 2 weeks ago. That was you a month ago. That was you 6 months ago. I'm like, yeah, okay, I do know what I'm doing. Because it just gives me that confidence that, because when you're looking at something, you can be unsure. And if you're unsure, you're bound to losing money. Like, you have to know what you're doing, you have to know what you want in this market, or it's just going to eat you alive.
Yeah.
Because it's really a dog eat dog world. It's not, the broker doesn't work with you. Your friends can't help you place a trade. It's you and your phone or you and your computer and those charts in the end. So
Yeah, that's
mm,
so cool. And you're doing all this stuff, kind of going back to the beginning where, hey, you've got basically two full-time jobs that you're doing and trying to get ahead and trying to be able to stockpile some cash and invest along the way.
exactly.
Um, we'll have to catch back up with you here down the road. So in 6 months or a year, where do you want to be? Do you have any targets or goals that you want to be at in the near
And
future?
in a year for sure, I know I'm gonna have a $5,000 personal account, and I expect you making at least $400 to $500 a month just based off that. I'm gonna slowly grow that account, and I'm gonna basically try to grow that account so I can pay 2 or 3 of my bills, just so I can start incorporating trading into taking care of my life. So I'm making this amount of money every month. I can put that towards bills and use the rest from my jobs, to save and invest more. And then 2 years from now, I expect for that to have catapulted to at least 25,000. And then I'll most likely be only working one job, or maybe no jobs at that point, because I know I should be able to cover my expenses here. Because that's actually, earlier when you were talking about expenses versus income, I
Mhm.
do that personally myself. I add up every bill that I have, and I add up how much I made the previous month from my jobs. And I basically calculate, okay, I should have this much money left if I do everything correctly. And I also live below my means, because I understand if I'm going out every night, driving to places I don't need to go to, eating out every night, doing all that, it's going to eat into the money that I could be using to save and invest, which will better my future. Because I'm 24 now, by like 27, 28, I want to be able to wake up when I want, do what I want, go where I want. And I want to really take care of my mom. She just bought a house. I want to get her house paid off and just have her be able to sit back, because she's been working a lot. She's been doing a lot for me.
That's awesome. Yeah, and that right there, hey, living the life with the power of choice to be able to have the passive income, the funds built up to be able to go do the things that you're passionate about, and not have to
This
stress about your 9 to 5 or your
exactly.
two
And
jobs.
the the time freedom. That's really
Yeah,
that's really
yeah, yeah, totally. Yeah, I mean, just awesome stuff. There's so much more we can probably dig into on this, but We dug into the savings equation, income minus your expenses equals your savings. And again, all kinds of content out there about cutting your expenses and budgets and whatnot.
Yeah.
And, generating more income is a hot button, especially right now in this environment with inflation being high and wages not catching up to expenses. So, Javon, just so cool to share your story and all the things you're doing and the hard work you're putting in, the dedication. And I do have one more question for you. So, all the things you're doing, I mean, I don't see a lot of people doing all that, especially at that age.
Yeah.
So in your circles, your friends, family, I mean, would you say there's a lot of other people that have that same kind of a mindset that you have, or is that seldom? Is it unique? I mean, how would you compare that to the people around you?
I would say it's unique, but I just met up with a friend yesterday actually, who me and him were talking a little bit on Snapchat, and we actually have the same mindset right now as of like growing and passive income and generational wealth and things like that. And he was talking to me about revenue sharing, which is interesting. He's going to talk to me more about it, but he's basically talking about how the people that he works with, they're making passively like $50,000 to $100,000 based off this revenue sharing business model. So other than him, there's nobody else really on the same wavelength that I'm on. I tell my friends about it. I've been telling them about it since 2019, but they don't, I don't know. It's just not something that everybody's into around me. So it's really just me and my friend that I really just linked up with. Me and him have really started talking and trying because we're on the same wavelength. But
that's awesome. And that's part of the reason why we're doing this, right? Is to be able to show people that are out there, hey, if you've got the desire to try to get ahead, build wealth, and do something that's a little bit different and outside the box, that there's other people like you that are doing it, that can share ideas and tips and maybe even connect. So just so happy to have you on. Thanks for sharing some insights and advice, and the algo without that. I love that stuff, and sharing your story. And we'll have to have you back on here down the road
definitely.
Very soon. So Javon Williams in St. Louis, Missouri.
Thanks,
Javon. All right, take care.